It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today again is the man, the legend, Mr. Michael Becker.
Hey, Paul.
How are you, Michael?
Doing good. What's new in the Old Capital world? We haven't, just a new year, so we're about to have some new events. What's going on in Old Capital's world?
Well, if you're an apartment owner or a wannabe apartment owner up in Northern California, of course, on January 16th, we have the meetup, the multifamily meetup over in San Mateo, just outside San Francisco at the Marriott to get more information for the January 16th event, which is going to be a good one because it's going to be JC Castillo, Brad Sumrock, and I. We kind of talk a little bit about how to buy multifamily properties out of the box. So talk a little bit about finding the deal, financing the deal, managing the property, finding out a way to sell the property after you've done all your fixing of the property. So January 16th, go to the Old Capital Podcast to get your ticket to do that. That's
oldcapitalpodcast.com. Yeah.
Old Capital Podcast. And then we're just announcing right now, February the 6th, we have a speaker series in Dallas. So if you're in the Grapevine Convention Center area, Grapevine Convention Center at February the 6th, we're going to have two economists. So we're going to have the economist from CoStar, and the one we're really looking forward to is the economist for Freddie Mac. So, I mean, these are the two main guys that are prognosticators about what's going on in an apartment, not just in the state of Texas, but throughout the United States. And so if you get a chance, February the 6th, go on to the Old Capital Podcast and sign up RSVP for that. That's going to be a great opportunity to learn a little bit about what's going on in 2019. And the biggest thing we like to do is network. And so you'll have an opportunity to network with lots of apartment investors. There'll be about 250, 300 plus people at that event, and that always is a good one to go to. So let's go to your question for this week. So, Michael, I understand there are certain post-close liquidity and net worth requirements for the general partner, or KP. Does cash value from a mutual whole life insurance policy count towards these requirements? If it does count towards these requirements, does cash value need to be converted to cash in my bank, or can it remain as a cash value held by the life insurance company?
So, yeah, I thought this may be a good time. We haven't touched on this in a little while to kind of recap some of the basic requirements, kind of in a greater picture to qualify from a sponsor standpoint for a Fannie Mae loan or a bank loan. So, to be specific about the question, yes, cash value of life insurance does count towards liquidity. So, when you have a liquidity test, generally Fannie Mae has a minimum of 10% of the loan amount in liquidity and 100% of the loan amount in net worth from the guarantor pool, the KP, the key principal pool, collectively in aggregate has to have those two kind of minimums. And so what counts as liquidity is just, cash in your bank, stocks, bonds, mutual funds, things like that. Cash value of life insurance, those count towards it. What doesn't count towards it is your retirement funds, so your IRA, your 401k. That counts towards your net worth, but doesn't count towards liquidity. So you have to exclude that. So, and then in your net worth, any sort of privately held businesses you have, the equity in your homestead, equity in other real estate investments, obviously all that stuff counts towards your net worth. So again, 100% of the loan amount in net worth, 10% in liquidity of the loan amount post-close. That's kind of the minimum requirements of the guarantor pool or the KP pool. And the banks are a little bit all over the map, but those are generally pretty good guidelines as well. Maybe have a little bit more liquidity if you go to a recourse loan at a community bank, but there's no really hard, fast guidelines that you can apply across multiple banks. So those are it. The other component that you need to make sure that you have if you want to go into the Fannie Mae world, Fannie Mae, Freddie Mac, is they generally want to have some level of previous multifamily ownership experience. So someone on the team needs to have that. Someone that signs as a key principal needs to have that. So if you don't have it, have someone else potentially co-sponsor the deal with you, or someone with some experience sign on as a KP. Or we've seen a lot of people be successful kind of coming up. They'll invest along other people passively first, and as part of that, they'll sign on notes for other people's deals as key principals to kind of help them get the net worth and liquidity requirements that they require to do that deal. And then along the way, you kind of sign on the mortgage, and then you get kind of in what Paul likes to say, the Fannie Mae Country Club, because now you've signed on the loan, you're in their system, and then you'll be ready in a few months down the road to come do your own deal down the road. So those are some of the general requirements to qualify for these loans from a liquidity and a net worth and experience standpoint.
Yeah, this is really a team sport, and there's a lot of things you can do as a team sport person. So that again, like Michael said, if you don't have the net worth and you don't have liquidity all by yourself, go out there and find somebody that can co-sponsor the deal with you, that wants to be a partner with you. So, we kind of will use their balance sheet with you. And, let's say it's 2 or 3 or 4 people. So let's just use an example of a $5 million loan. Just like Michael said, we need to see 10% of the $5 million or $500,000 in liquidity. So if you don't have the $5 million, and again, this is post-closing liquidity. This is not before you put the money into the transaction that you're putting into the deal, but it's after we close to make sure that you have enough cash. Again, why Fannie Mae and why the banks are looking for that? They're looking for a rainy day. They want to find out, making sure that in case something doesn't happen, that occupancy doesn't get there after you do the rehab of the property. They want to make sure you have enough money that they don't have to put into the deal, that you put into the deal, or your partners put into the deal too. So whether it's you by yourself, or say it's 2 or 3 or 4 people to add up to the $500,000 in liquidity, that's definitely possible. And again, just like Michael says, if it's a bank deal, again, we talked about Fannie and Freddie at the 10%, but if it's a bank deal, banks may require up to 35% of the post-closing liquidity. So they're a little bit more conservative. They may want to see more liquidity on your balance sheet. Again, you prove it up by a bank statement, whether it is a monthly bank statement or quarterly financial statement, to show that you do have money for a rainy day. Second part of that is net worth. Again, net worth, we're looking for 100%, whether it's you, in this case, it's a $5 million loan, 100%, $5 million in net worth. Again, this is not, no money, no job type of stuff. That's not what this is. They want to make sure they're lending money to people that have the financial capacity to pay them back. If this was your money, you want to make sure that person you lent the money to had the capacity to pay you back. So net worth is one of their check boxes to make sure that you have the capacity to pay you back, whether it's you or it's sponsor number 2 or 3 or 4, however long it takes to get to that net worth. That's what we need. Again, they're signing on the same thing that you're signing. They're going to sign a guarantee into the transaction. You'll be the managing member. They'll be just part of the crew in the airplane. I mean, you're the pilot. They're going to be kind of the co-pilots, but they're all signing on behalf of all the people in the back that are drinking their Coke or having some peanuts in the back of the airplane. You're the captain. They're the co-pilots, but you all sign the guarantee. You're kind of the fiduciary to the people in the back. Don't forget about that. Again, it is a team sport. Again, if you don't have the multifamily experience, we can use sponsor number 2, sponsor number 3, sponsor number 4 that may have the multifamily experience. And if they don't have it, we're going to take a look at maybe kind of a different way. Instead of doing a Fannie Mae loan, we may have to do a bank loan. Banks sometimes can put you into the business if you have a multifamily management company that can also oversee the property too. So we have different ways of structuring these deals. You want to always ask the guys over at Old Capital Lending to kind of help you make decisions on how to structure these deals. Anything more, Michael?
Yeah, that's really what a good, competent commercial mortgage broker could do for you, which, obviously all the guys at Old Capital are in that boat, is it can help you structure the deal, put you in a position where you get the yes more often than you don't. So that's really what the job of us here at Old Capital is, to structure these deals and help you get the yes and give you, increase the certainty of execution. Because when you're putting these deals together, you have earnest money, you have all these pursuit costs, and you start tying a bunch of deals up and donking off material amounts of money along the way. Not only do you lose money, but you're going to hurt your reputation. So certainly reach out to the guys. Go to oldcapitallending.com, or again, you can also go to the oldcapitalpodcast.com. Both those. I certainly encourage you guys to come out. Like Paul mentioned, if you're in Northern California on January 16th, make sure you go to that. If you're going to be in Dallas-Fort Worth on February 6th, there'll be 250, 300 people minimum that'll come out to this. So it's a pretty large scale multifamily deal, and a lot of these people are not green. So if you're green, that's fine, but a lot of these people will have real, true experience. There'll be a lot of great networking with both everyone here at Old Capital, but more than that, a lot of the brokers in our market will be there. So generally, we're seeing 6 or 7 different multifamily brokers that come out to this event. So I always like to say, you can't do this business behind your computer at your home or at your office. You got to get out and get networked, and this is a great event to go do that.
Tell us a little bit about what SPI is doing these days. I mean, you guys are putting together transaction after transaction. Tell us a little bit about maybe the 2 things that SPI does.
The majority of my focus and what we try to do the most of is we'll just go out, identify high quality multifamily projects with some upside. We'll tie them up, secure the financing, and we'll go out and raise capital. So that's predominantly what we do. We're apartment syndicators essentially. And so that's really kind of primarily what I spend most of my time on. We have done a few deals where we call them like advisory services. So essentially if typical profile of someone that has a large 1031 that wants to come into our markets, Dallas or Austin, and they don't have any relationships and contacts, that we can kind of take their money, and the value proposition to the broker is it's my client's money, but our execution. So we can get doors open that you couldn't do on your own. So kind of the minimum that we typically would require is probably $2.5-3 million in equity to make sense for us to spend some time on that. So that's kind of, if you happen to be in that boat, it just typically tends to be like someone with a 1031. That could be something to maybe potentially reach out and have a conversation about. The best way to find out some more information about us is just simply go into my company's website, which is www.spiadvisory.com. It's SPI like spy, advisory.com. And there's a contact us form. And if you fill that out, I'm always happy to have a 10 or 15 minute telephone call with listeners off the podcast.
I actually love that advisory business, just because if you are living in California or Philadelphia or Chicago and you're thinking, you have cash in your pocket, and I'm not talking about, $500,000. I'm talking about $3, $4, $5 million, but you don't know people in this marketplace. I'm not going to say Texas is the hottest marketplace, but if you don't know people in the Dallas-Fort Worth marketplace, the first call you make is to SPI, and on their backs, you get preferential treatment and pricing in the transactions, and you get preferential vendors, and you get, they put the whole transaction together. I mean, they are great operators.
Yeah, we're professionals. This is not like a part-time gig here. This is kind of what we do. And like I said, I think it's just the way of the world. This is a completely unfair business. So get to kind of level the playing field or get on the right side of the unfairness, certainly track record, experience, and relationships all matter. So that's kind of what we can do. So, again, that's not the most primary focus of what we do, but that's certainly something that we offer.
That's a great deal. All right, Michael Becker, thanks for being on the podcast. I'm Paul Peebles. Have a great day.